Kim, what's on your radar?
Well, Democrats are looking for new ways to fund their reconciliation package, which has now dwindled down to below $2 trillion. The newest proposal is to tax the unrealized capital gains of certain assets of the nation's ultra-wealthy.
Well, I think what's under consideration is a proposal that Senator Wyden and the Senate Finance Committee have been looking at that would impose a tax on unrealized capital gains on liquid assets held by extremely wealthy individuals, billionaires. I wouldn't call that a wealth tax, but it would help get at capital gains, which are an extraordinarily large part of the incomes of the wealthiest individuals.
So Janet Yellen says this tax would only apply to the ultra wealthy. Currently, Democrats are saying the tax would apply to only those with more than $1 billion in assets or $100 million in income for 3 consecutive years. But first, what would this tax be taxing exactly? What are unrealized capital gains? Well, unrealized capital gains are the increases in value of your assets that you haven't sold. That's why they're unrealized. So let's say you own some stock. The stock was worth $10 a share when you bought it. The company does well, and suddenly it's worth $100 a share. You haven't sold a single share, but your portfolio has, on paper, increased in value tenfold. Paying unrealized capital gains tax is paying on that increase in value even though you haven't sold it and you don't have the cash in your hands. Though Democrats haven't specified exactly which assets would be subject to these new taxes, this could include any number of things, such as stocks, private companies, business investments, homes, other real estate, artwork, and any number of other appreciating assets. The list could be quite large, complicated, and could require an annual appraisal to figure out what things are worth. It's a lot easier to tax something you've sold than to tax things you haven't, but which have increased your net worth on paper. So you might be thinking this sounds crazy. How can you tax something that's only gone up theoretically on paper? The closest thing the average person has that's similar to this would be sort of like property tax on a home. Some regions of the country require homeowners to pay property taxes based on the value of their home, not based on the price they bought it for. And even though this isn't exactly like unrealized capital gains, it kind of gives you a sense of why this new proposal is so controversial for some people. People who are smart enough or lucky enough to buy homes in areas that eventually exploded in value often find themselves penalized for it come tax time. They don't have any control over whether or not their house increases in value, yet they're required to cough up the cash regardless. So elderly people who bought homes like 40 years ago, they could end up with property tax bills that they can't afford on their fixed incomes. And this has actually been a problem that's caused many people to lose their homes. They're forced to sell simply because they can't afford the increased property taxes that are based on the home's new value. But Democrats say they aren't talking about the average person. They say this will be focused on the richest of the rich, people who can afford to lose some of what they've got. In fact, perhaps they need to lose it in order to balance out the wealth in our society. 40 years ago, the country's 400 wealthiest people collectively only held about 1% to 2% of the nation's GDP, which is still a lot. But now it's more than 20%, and it's increasing more rapidly. It seems the more money they accumulate, it snowballs, and they're able to accumulate more faster and faster. Now, without intervening, it likely won't take another 40 years for their wealth to increase to 40%. It's likely to happen a lot faster. And something's got to give. In my mind, there's nothing wrong with making some money, even lots of it. But imagine the nation's wealth like a pie. One tiny group of a few hundred people are eating 20% of a pie while leaving 330 million to split the rest. Sharing the rest with so many people obviously leaves each person with crumbs. But it gets worse. As time goes on, somehow the small group is able to snatch up more of the pie the others were attempting to share. Now, this leaves the smaller group gorging out on more of the pie and leaves hundreds of millions of poorer people continuing to split the crumbs even more. And at some point, someone needs to look at the tiny group eating the bigger piece and say, it's time to split your part of the pie. So that's ultimately what this unrealized capital gains tax is attempting to do. But obviously, it comes with its problems. So first of all, The rich are going to scream about having to pay taxes on fictitious capital gains. They will find workarounds to ensure they aren't forced to offload some of their assets in order to pay the tax. The IRS will have to figure out how they can add this new workload of attempting to figure out the new on-paper net worth of these billionaires, which will be cumbersome and lengthy. And much of their time will likely be spent auditing the ultra-wealthy, appraising their collections and assets. So as much as I'm all for figuring out how to get the ultra wealthy to split their massive part of the pie, I'm not sure this is the way to do it. The biggest fear I have is that this could end up trickling down into a policy for normal people. When Janet Yellen tried to tell us requiring banks to report on accounts with $600 worth of transactions was targeting the rich, we called bull. We knew that was targeting gig workers, not billionaires. And this new targeting of unrealized capital gains might end up being something similar. So what is being sold to us as a policy targeting the ultra wealthy could in fact end up targeting any average person who happens to gain, let's say, $600 in the stock or even crypto market instead. Because quite frankly, it's going to be a lot easier to target people who can't tie everything up in courts and easily move assets through tax havens. So this is my big fear with this unrealized capital gains tax, is that it'll ultimately, even though the target right now is this ultra wealthy, the billionaires, that the idea of taxing unrealized capital gains, if we allow it to happen to the wealthy, that it will ultimately sort of kind of come down the pipeline. And the next thing we know, and I think one group they are probably attempting to target at some point would be the crypto market, saying, look, you've made all this money off your Bitcoin. Even though you don't have any cash in your hands, but you got all this Bitcoin, they'll say it's time to pony it up. So I think that's kind of the big fear a lot of people are having with this. I'm curious what your take is on this, Robbie. What do you think of unrealized? I think I kind of know what you're going to say.
Oh, you know what I'm going to say. No, I agree with you, Kim. It's a huge problem. Taxes are in fact bad, and we should defund the tax police, the IRS, even further.
It's that simple for you, right? Libertarian, just get rid of taxes.
Yeah, get rid of taxes. No, but you raise a lot of. Yeah. I mean, I ideologically believe that, but you raise a lot of the pragmatic, practical reasons why, in practice, it is difficult to. If you just say, well, who can be against that except for Robbie? Who can be against taxing the ultra rich? It's what we need to do. But then in the details, it does get tricky because they have a lot at stake, and they have a lot of ways to hide their wealth away and avoid the consequences, avoid paying the taxes, and then what other policies is everyone else who can't do that? What are they left with?
Right, and that's what I'm afraid of, is that it'll start with the rich when they realize it's too difficult to get them, because they're able to use all of their wealth resources, with their attorneys and accountants and wealth management, that they'll then say, okay, well, we're going to shift this policy towards other people, normal people who can't do that.
Normal people don't have many, unrealized capital gains to really go after to make it worth it for the IRS to do it. This bill goes after people who have $1 billion in income in a single year, billion in gains in a single year. And if we don't do something about it, what we're going to end up saying is that we're just giving up on taxing the rich at all. Because what the rich currently do is they have a strategy that's called buy, borrow, and die. So they buy some stock, or they create a company, and they watch it just grow and grow and grow and grow and grow. And instead of ever selling any of that stock to live on, they borrow money from the bank. And they pretend that this money that they're borrowing from banks that is backed by their capital gains is not income. And so therefore you can't tax it. And so they just live on that for their entire lives, never pay a dime in taxes like Bezos didn't. Bezos collected a child tax credit that year whenever his tax returns were disclosed, because he doesn't sell his Amazon stock. He just borrows money and claims that's not income. Then the finishing move on the strategy is you die. And when you die, you hand down your wealth to the next generation, which then gets it back to zero on capital gains.
Bezos should be breaking up coal to earn that child tax credit.
Yeah, he should. There should be a work requirement. Although he works.
Yeah, right.
I think there's probably other ways in order to go after that wealth, like when at death. Right, transfer of assets,
right, but
prior
they oppose
to death.
that too. They oppose that. I mean, one thing you could do is you could tax that bank loan and be like, look, that's not a loan. Get out of here.
Right.
That's money. That's capital that's backed up by your gains, that counts as your gains. Like if you want to try to both have your stock and live off it too, you're going to have to pay taxes. If you're not touching your gains and it's just sitting there growing, then that's different. Then they literally want their cake and want to eat it too.
I mean, definitely something has to happen. There's no doubt about it. I mean, workers are being taxed every paycheck. And wealthy people are just not, because they're not doing the daily breaking up cold jobs, right? Like Jeff Bezos is supposed to be doing. So because they're not doing those daily jobs and they don't have that daily paycheck, they're not being taxed in the same way. And we do need to have something that, absolutely, personally, and I know not a lot of people agree. I'm sure Robbie won't agree with this, but getting them to give the pie, some of that pie back. I mean, we cannot live in a society where they're eating more and more of the pie as time goes on. We're going to be really left with nothing. And it might, I get theoretically and philosophically about this idea of, well, we should just let people get as much as they, can. And why not? They can go become rich. That's the American dream. I mean, I understand the thinking behind that, but in reality, it's not working out. People are just getting poorer and poorer and poorer in this country. And that is a huge problem we do have to address somehow. I just am not sure if unrealized capital gains in this way is the way to do it. But a lot of that is also because they haven't fleshed it out. They haven't even really told us, what is this going to be like?
That's true. A lot of devils in the details here.
Right. So we'll see.
All right. Thank you for that. And we will have more Rising right after this.